So if you have cash that you want to invest, how about some ideas? Why not look at some value stocks? Our next guest thinks that's a good one. Dominick Tavella is with us, founder, president, Diversified Private Wealth Advisors. All right, let's put some cash to work, right? You don't want it sitting there forever. Value stocks, should that be in everybody's portfolio? You tell me.
In one word, Nicole, absolutely. And ironically, if you look at literally the last decade, growth stocks and growth ETFs have really dominated the landscape. We were dealing with a situation where large cap technology companies really kind of took over. And if you look at, in our case, a lot of new clients coming on board, they're loaded up with that kind of stuff. And, the last decade has really performed very well. But these things are very cyclical in nature, and value is back in vogue. On a year-to-date basis, value has actually outperformed growth, and it should be a core portion of your portfolio. And then you can overweight or underweight the different sectors, but it should be a core part of everybody's portfolio.
Okay, so go through some examples with us. I mean, we're going to pick your brain here because you're the pro and you think one sector really here is financials to consider, right?
Yeah, this is an area I've brought up in past shows with you, Nicole. I mean, I love financials, but if you look at them in 2020, my God, that was one of the worst performing sectors, right? Think of a JP Morgan Chase, think of a Bank America, a Citibank. The financial sectors in total were horrible last year, and they are very economically sensitive companies. The country was shut down. It's no shock that these companies got beat up last year. But as the economy opens up, XLF, the ETF in the financial sectors, has had a fabulous year, and I think we still have a long way to go. And you can look at the entire value sector as a whole, year to date up 14-15% versus the triple Qs that are up 8-9% year to date. I think as the economy opens up, they will overperform and continue to overperform. Yet because of past history, many clients don't have these kind of exposures in their portfolios.
So financials is something we've taken a look at. Everybody last year was saying they're on sale, they're on sale. I mean, you have to have some sort of real, chutzpah to get in there and buy some of these things, especially when they're down. What about telecom and large pharma? Those areas?
Same idea, right? No one wanted them last year, and it makes sense, right? So they were overweighted in these large cap tech stocks, the Googles, the Netflixes of the world, and understandably so. But trying to make bets where you can put 100% of your portfolio in one sector or overweight large cap growth and ignore everything else for a period of time, that can work. And then there'll be times for a long period of time where it doesn't. There's a lot of experts out there that think that value investing will probably be the genre to be in for the foreseeable future, and not maybe just a year, but maybe 5 or 10 years. I think you have to have exposure in both sectors, but the stuff that's on sale even today is the value side of the portfolio, the stuff that did not do well last year that I think is still at a bargain basement price.
And then, we really did see a record run in the past year for many investors who overweighted growth in the portfolio. What do they need to consider now when they're trying to rebalance? At the same time, we may have higher capital gains tax. Maybe they can just rebalance and reinvest it.
So now we're starting to see the pendulum swing, right, where they're selling off these stocks that did really well. Maybe there's a lot of fear out there that they're going to maybe, go down substantially. Look, if you think about the Apples of the world and the Googles of the world and the Amazons, you could see a little bit of a pullback. And we saw a little bit of that earlier on this year. Higher interest rates generally don't bode well for those kind of companies. On the other hand, you don't want to sell them all, and you don't want to get completely out of that space. Keep your portfolio high quality, companies that have a good, strong balance sheet. And yeah, there'll be some volatility, but trying to guess that all your portfolio should be in one sector or one side of the ledger, generally speaking, is not a good bet. So balance overall, you should have both exposure in your portfolio. Overweight one side or the other. I think you should be overweighting value. Do not eliminate growth completely in your portfolio.
Okay, give me 10 seconds on earnings. How much and how closely should investors watch these quarterly earnings?
We are religious about watching those earnings, and we started out the year with most analysts talking about the S&P earning somewhere around $175. That whisper number got into the 180 range, and now we're starting to hear $200 of earnings for the S&P.
All right.
Which, if you look at the S&P today, you go, wow, it's overvalued. Not if it earns $200, it won't be.
Okay.
And we are on pace maybe to hit
All
those
right.
kind of earnings numbers.
Dominick, thank you. Dominick
Have a great
Tavella,
day.
founder, president, Diversified Private Wealth Advisors. Thank you for joining me here on Market Overtime.